US stocks end sharply lower as global equities melt down. The Dow Jones tumbles over 1,000 points while the S&P and Nasdaq end with a 3% cut. US recession worries shook global markets, driving investors out of risky assets. Futures this morning are, however, indicating a sharp rebound. Asian markets rebound sharply at open. Japan's Nikkei and the broad-based Topix index climb more than 8%. The GIFT Nifty is also indicating a gap of open of more than 200 points. Brent crude hovers near $76 a barrel, hitting its lowest level since January, and recession fears. Gold too falls 1% owing to the wider global market sell-off. The Reserve Bank's two-day monetary policy meeting begins today, and the interest rate decision will be announced on the 8th of August. The central bank is expected to maintain status quo on rates. Political turmoil in Bangladesh after 15 years in power. Prime Minister Sheikh Hasina flees the country, lands in India and is likely to seek asylum in London as anti-government protesters storm her residence. The army chief steps in and forms an interim government. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you. A lot of geopolitical, political and market news that we have to track. But first up, as always, let's take a look at what the Asian markets are doing. Remember, it was a sharp fall across major global markets yesterday, especially Asia, where the Nikkei saw a big cut. And today, it's a big rebound that we are seeing. In fact, Nikkei has almost recouped yesterday's losses. The broad-based Topix index has climbed more than 8%. We have the Taiwanese index, which is up around 0.1% right now. Hang Seng is up 0.8%. The other indices as well. Kospi, for instance, is up 3.5%. We have the other, something like a Shanghai, is up 0.4%. So across the Asian markets, we are seeing a rebound. And this is, of course, courtesy US futures, which have seen a rebound after that sharp cut that Wall Street saw yesterday. The GIFT Nifty, that will come up for you on the screen, and that one is indicating that the start could be in the green after that cut that we saw, but then some recovery. There could be some green on our screen today. So 219 points higher as per the GIFT Nifty. That is what the implied open is suggesting right now. Let's talk about the US markets. US stocks ended with steep losses, with the Nasdaq and S&P down at least 3% each and the Dow Jones down over 1,000 points as the market extended last week's sell-off amid US recession worries. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets falling sharply Monday, with all of the major indexes down well over 2% as concerns over a slowing U.S. economy sparked a global market sell-off. The Dow lost 1,034 points, the S&P was down 160, and the tech-heavy Nasdaq really taking a big hit, dropping 576 points. Today's market meltdown, not exclusive to the U.S. It was sparked by Japan's Nikkei, which had its worst day since the Black Monday crash of 1987. As for the stocks taking the biggest hit here in the U.S., it was the tech sector, as the sell-off of mega-cap stocks that began last week continued with a vengeance. The so-called Magnificent Seven, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, shedding about $1 trillion in market cap collectively just since last week. Meantime, a federal judge ruled today that Google has illegally held a monopoly in search and text advertising. The landmark case brought by the Justice Department and several states alleged that Google kept its dominant share by creating strong barriers to entry for competitors. The court singled out Google's exclusive search deals on Android and Apple phones and tablets, saying both helped to cement anti-competitive behavior. It's now up to the judge to decide the remedy, which could lead the company having to change the way it does business or potentially sell off part of its business. That's what's happening here in the U.S. Back over to you in Mumbai.
Okay, it was a power-packed day in the U.S. A lot of action there, but let's move on. Chicago Fed President Austin Goolsbee downplayed recession fears, but said Fed officials need to be cognizant of changes in the environment to avoid being too restrictive with interest rates.
You've seen the table. It's a huge table. So everything is always on the table, whether that's increases, cuts, et cetera. But the Fed's job is very straightforward. Maximize employment, stabilize prices, and maintain financial stability. That's what we're going to do. We're forward-looking about it. And so if the conditions collectively start coming in that on the through line, there's deterioration on any of those parts, we're going to fix it. My view is we're as restrictive in real terms as we've been, higher than this entire cycle and highest in many decades. And you only want to be that restrictive for as long as you have to. If you don't think there's a chance of overheating or it doesn't look like overheating, it's not the right time to be tightening.
All right, that's some expert opinion coming in. Meanwhile, former Fed officials also weigh in on concerns around the economy slowing and if an emergency Fed meeting is warranted. Listen in.
We are in a slowdown period, and I think that's going to take us further down the road to getting price inflation down towards the goal. Now, the market is reacting, and the market was, many people thought, in a fairly frothy spot to begin with, so that's backing off. But I think the real economy is slowing modestly and will probably continue to slow, but it's not falling apart. So there's probably room to cut, and I think the Fed will do that, but I don't think we should be panicked.
I think this business of asking the Fed to react with a cut, I agree with Ron Insana, who just said, maybe because we've been friends for, I guess, 30 years now, that it would be panicky and it might send the wrong signal. The Fed will always act if something occurs that threatens the credit system or the economy. And it's not clear that what's happened the last few days, including today, with the Dow off over 1,000, it's going to impact the economy significantly or threaten the credit system. If it does, then they would move. I don't see any need to move intra-meeting unless there is a threat to the credit system. And we can't say we see that yet after just a couple of days of harsh market reaction.
Okay, it's time to also listen into what market experts make of this global meltdown and subsequent Fed action.
You know, this may surprise you. I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between, 3.5% and 4%. I mean, the market knows so much better than the Fed. So, I mean, they've got to respond. Listen, their own stated normal Fed funds rate when we hit targets is 2.8. They're basically at the target.
I think stocks are at new highs by year end. I think the next 3 to 5 years is all about quality and all about U.S. markets, and everything goes up together, meaning small mid-cap. We revert a recession this time around, and I think we'll have a normal recession that'll be more of a consumer recession another year or two away, but it's when people stop talking about the recession. So the Fed has done a great job. We're going to hear more in Wyoming here this month in terms of what Powell is saying. And our great economics department now has said 25, 25, 25 by year end.
It starts with the fact that the market has been up a lot really since October of 2022. We had a 50% move up, and so it was very overbought, and we were sort of waiting for an excuse for a correction. So I think that's the first thing. Second thing is that in the last 12 days, views in the economy have moderated. I think we are looking at a softer economy. I want to make it clear, we're looking at a slowdown scenario, not a recession scenario. We think there's just enough between the psychology of what's going on and the actual weakness in some of the data, maybe to get you down to a 1% GDP growth rate for the second half of this year. But there's no reason why that should push you into recession. There's not enough wrong with the economy for that to happen. And in particular, I think consumer balance sheets, consumer income growth is strong enough to tide us through this.
Okay, it's time to get to the final update on the global markets. European markets fell sharply at the start of the new trading week, though paired losses towards the end of the session amid a global stock sell-off. The regional stock 600 index closed 2.17% lower, hitting a 6-month low in global rout on U.S. recession. All sector and major bosses finished in the red, with utilities and oil and gas stocks both losing over 3%. With that, we'll slip into a break. Up next, we'll tell you how all these overnight cues could impact our own markets. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Let's talk about a Power Prep segment. We have our research team joining in with what the trade setup looks like, the stocks that'll be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormaz, let me come across to you first up. A big reversal is what we are seeing today.
Indeed, and a big reversal is certainly on the cards, and after that sell-off that happened yesterday, we're seeing some bit of rebound from lower levels is what the GIFT Nifty is suggesting, a gap up start for our own markets. But last night's session on Wall Street was possibly a culmination of whatever happened through the day across Asia and Europe. All the three indices saw a sharp sell-off. Over the last 3 days now, the Dow Jones is down over 5%, the S&P 500 is down 6%, and these three indices have seen their worst 3-day drop since June of 2022. But the futures are now seeing a bit of a rebound. The Nasdaq futures are up 350 points. The Dow futures too are trading 300 points higher. The Nikkei has regained almost all the losses that it made on Monday. So positive cues coming in across Asia from the US futures as well, and that is reflecting on the GIFT Nifty, which is suggesting a gap up start for our own markets. Now for yesterday's trading session, well, there's nothing much to write home about because almost every index got swept under the selling pressure, be it metals, realty, auto or PSU banks. There was selling pressure in the railways and the defense PSUs as well. And the India VIX, that showed the sell-off reflected in the India VIX, which was at one point up almost 50%, was the biggest single day jump since August of 2015. So we'll see if there is a bit of a cool off there in today's session, if there is a rebound. The institutional selling, the FII sold almost $1 billion yesterday. The DIIs bought a similar quantum, so buying each other, almost cancelling each other out in yesterday's session. Some important things to watch out for today. Now, does Monday's low become the immediate swing low? That is a big question. The financial services expiry is today, so we'll keep an eye out for that as well. The impact on the Bangladesh linked companies is what we'll keep an eye out for. The final day of the Ola Electric IPO as well. So plenty of cues to watch out for, but a rebound is certainly on the cards.
All right, so a lot of cues that we'll be tracking. Thank you for that, Hormaz. But other stocks that'll be on our radar, Sudarshan has that list. Good morning, Sudarshan.
Morning, Stone. So we'll start with two Nifty companies that have reported earnings, starting with Bharti Airtel. It was a muted quarter. Earnings were in line or slight miss. Margin has come in at 51.8% versus estimate of 52.2%. India mobile revenue was up 2.1%, while ARPU growth was at 1% to rupees 211. ONGC earnings were better than estimates due to lower OPEX. Revenue has increased 2% and margin has risen 250 bips sequentially. And crude realization was at $83.05 against our estimate of $82.80 per barrel. Tata Chemicals, it was a mixed set of earnings. There was a sharp fall in earnings year-on-year, but there was an improvement on a sequential basis. Margin was down 960 bips year-on-year, but it was up 210 bips sequentially. Deepak Nitrite, earnings have improved both year-on-year and sequentially. Growth was led by phenolic segment. Revenue has increased 22% and margin has risen 230 bips. In the news flow, Lupin has got show cause notice from Maharashtra GST authorities seeking recovery of almost 672 crore of tax and penalty. Biocon has got establishment inspection report with voluntary action indicated for its API unit Site 5 in Andhra Pradesh. Aurobindo Pharma US FDA has classified UGI Unit 2 as official action indicated. Also keep an eye on some stocks that may be impacted due to political situation in Bangladesh, and those stocks are Marico, VIP Industries, Jubilant Food and Trend. In the other list of earning companies which have reported good earnings were Vijaya Diagnostics, Schneider Electric, Triveni Turbine, Motherson Sumi Wiring, BLS International and Aarti Pharma. And companies which have reported weak earnings, Bharti Hexacom, Monte Carlo, BML and Sirma SGS. So keep an eye on these stocks that might be in focus today.
Okay, the list is long, but thank you so much, Sudarshan, for joining us as always and telling us the stocks that'll be in focus today. Let's talk about the F&O space. A lot of action there. Manglam is joining us now. Good morning, Manglam.
Good morning. Indeed, a lot of action overnight. We did see a big rout in yesterday's trading session. The Nifty Bank, the mid-cap index, all of them getting pummeled. But the important part was the Nifty at the end of the day closed above 24,000 and the Nifty Bank too closed above that 50,000 mark. So that would give some support in terms of sentiment. Though there is volatility and that's reflected in the way the India VIX rose. In fact, it's the biggest daily spike all the way since August 2015. And remember, between August 2015 and now, we've had big days of volatility in our market as well. None as sharp impacting, on the VIX as yesterday itself. But the GIFT Nifty is now indicating some sort of recovery. The question isn't about where we open. The question today will be where we close. Because, will this recovery that we saw be used as a profit booking opportunity for those who are probably, or exiting opportunity for those who are sitting on some of their long positions or not, is the big question that we'll have an answer to. The FIs, they've been selling lock, stock and barrel, over 10,000 crores in yesterday's trading session, and they've been on a cash market selling spree as well. Even in index futures, there was a sale of close to around 2,400 crores, where they unwound close to 11,000 longs and also added around 24,000 shorts. Nothing major in index futures by the FIIs. This is something that they've been doing over the last few trading sessions itself. They've removed their long positions from 66% to about 60%, and net exposure is down by about 56,000 contracts as well. Nothing, which would tell you that the kind of fall that happened yesterday got a lot of people panicked. 24,000 put and 24,000 call have both been in action, but the put call ratio now is at 0.72, and it's typically from 0.72 where we see a bit of a bounce, because this indicates a little bit of an oversold level. So we'll watch out for that. Also, a couple of levels to watch out for the Nifty. The 50-day moving average becomes an important support. The Nifty Bank as well, the 100-day moving average. HDFC Bank, which is the common factor to both of them, will be, also in focus, because the stock is exactly at the 50-day moving average. And another index that this will be in focus for is the Fin Nifty, because it's Tuesday and it's the Nifty Financial Services expiry. HDFC Bank typically holds the key.
Okay, all right. Thank you so much, Mangalam, and everyone else for joining us and prepping us up for this trading day ahead. Well, it's time to talk about the commodity markets as well. There's been a lot of action because of the global issues. Manisha Gupta is joining us with all the updates as always. Good morning, Manisha. What do you have for us?
Good morning, Sonal. Thank you for that. Well, as there has been a bit of a pause in the sell-off that we saw yesterday in equities, in currencies, so has been the case for many commodities as well. So we are looking at a bit of a pause, even some opportunity buying, especially in case of crude oil prices. It hit 7-month lows in the evening yesterday, but in the Asian markets, it's trading almost 1.5% on the higher side. So from hitting a $71 of a low in case of the WTI prices, we are holding back again around those $74, $75 kind of levels. It has to do with the geopolitical tensions in Middle East, which are adding to uncertainty. Also remember, the dollar index is trading at a 5-month lows below 103. So many of these dollar-denominated commodities are seeing some support. But the support really ends there, because when you look at the metals as a sector, we have seen declines continue there in the Asian markets even today. You have copper, which is trading at a 4-month lows, lead at a 4-month lows also. Aluminum is trading at a 5-month lows. It's a constant decline that we also have seen in case of nickel and zinc prices, multi-month lows onto that one as well. It is about poor demand, rising inventories, which continues to weigh onto the metal prices. Sugar is on the weaker side. Rubber, though, has seen some gains come back into the market. So it's a mixed market, but a very defined decline continuing for metals.
All right. Okay. So that's what's happening in the commodity space. Thank you so much, Manisha, for joining us. With that, we'll slip into a break. Up next, political turmoil in Bangladesh as Prime Minister Sheikh Hasina flees. We get to the updates on the other side. Welcome back, and in the latest turn of events from the subcontinent, Bangladesh has been pushed to the brink after Prime Minister Sheikh Hasina resigns and flees the country amidst severe student protests and a brutal crackdown. The President of Bangladesh has dissolved the parliament and the army has announced an interim takeover of the government. Let's go across to Mangalam. He's joining us with an overview of how these protests could affect Indian companies. Mangalam.
Well, being our neighbor, there is a fair amount of trade that we have with Bangladesh. Impact on some companies will be a little more than the others, but largely there could be a sentiment impact itself. So for VIP Industries, they have a plant in Bangladesh, so nearly 35% of their production capacity is sourced from there. That could face some disruptions. Marico reported good numbers yesterday, but remember 44% of their international sales, which accounts for 25% of their overall mix, comes in from Bangladesh. They've been talking about reducing their exposure there, but still about 10-11% coming in from there could be a cause of a bit of disruption. But for all the other FMCG companies, Dabur, Imami, Nestle, GCPL, Britannia, it's sub 5%, could also be sub 2 to 3%. Even for names like Pidilite and Asian Paints would be about 1 to 2 odd percent. So, temporary disruption is what we can expect. Jubilant Foodworks, they also run the franchise for Domino's Bangladesh. They have 28 stores there, roughly 1% of their consolidated sales. So a mild sentiment downtake out there as well, and some supply chain disruption. Trent, for instance, among the top 3 sourcing countries for the company, they have Hong Kong, Thailand and Bangladesh. So maybe some near-term sentiment disruption out there as well. Remember, the stock ended about 3.5% lower yesterday too. But But the most important to track would be all these garment and textile companies, as a lot of global companies source their production from Bangladesh itself. So if now we were talking about China +1 earlier, if people are looking at Bangladesh +1 as well, then maybe we could see some positive impact or positive rub-off on a couple of these textile and garment-making companies in particular from this Bangladesh disruption.
Okay, absolutely. Those sectors and companies will be in focus. Thank you so much, Mangalam, for joining us with all those details. With that, it's curtains down on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.